This is your weekly real estate update for the greater Portland, Maine area. These are closed sales in the last 7 days, median numbers. Days on market came down just a little bit to 13 days on market. The list to sale ratio still at 100%, so still a pretty strong seller's market. And the closed price went up to $480,000. Your 30-year average interest rate ticked up a little bit to 6.34%. And of course, US inflation still at 2.9%. The big news this past week was the government shutdown. We're now going into the second week, so we're going to talk a little bit about that, who might be affected, who may not be affected, and we're going to talk about the Fed, the economic data, and what we should expect for interest rates moving forward and what that could mean for you as a buyer or seller. So let's start off with the shutdown. Who is going to have an immediate effect from this? Well, first off, federal employees of non-essential roles are immediately going to be furloughed. Some of them will be asked to continue to work without pay. Some will just stop working. That's about 750,000 Americans, so not a small number, and could have big implications for certain pockets in the United States where there's a lot of federal workers. Other programs that are immediately affected are federal monuments, national parks closed. So if you're planning a trip, don't plan to go to any of those. In addition to that, supplementary programs such as WIC will not immediately be shut down, but if this drags on, they could be in fact impacted. Things that are not going to be affected that people have big questions about are Social Security payments will continue, Medicare, Medicaid will continue, essential services such as military, mail, ICE, border control, all of these will continue even though there is a government shutdown. Now let's move on to the Federal Reserve. So in interest rates, of course. So we had employment numbers come out, and important to know is one of the things that happens during a shutdown is that statistics stop being analyzed and produced by federal agencies. So typically we would look at the BLS numbers, and the Fed would weigh very heavily on what is the BLS numbers saying about the job market. Is it weakening? Is it getting stronger? Without those numbers this past week, they had to lean into the JOLT numbers as well as ADP. Both of those job numbers came out and again showed a cooling job market. JOLT said basically new hires were flat, and ADP said actually we had a negative $32,000 job creation this past month, and they continued to adjust the previous months. So if you look at that over the last quarter, we've had 3 of 4 months with negative job growth. So more indications that the Fed is very likely to lower the rates in the end of October. The market's already pricing that in. There is a 99% chance, according to experts, that we'll have a cut then, and then a 89% chance of a cut in December. If both of those cuts happening, we could be floating in the low to mid fives for mortgage rates by the end of the year. The third thing I want to look at is the Case-Shiller. So as a reminder, the Case-Shiller index looks at a home that sold and then the same home sold a year later. What does that mean for appreciation in the market? It's a very accurate look at the market. The last 4 reports from Case-Shiller have all showed a cooling market. If you remember, on average, we see 4% appreciation of real estate year over year. During the COVID years, we were seeing double-digit appreciation, but the last 4 months have shown under 2% according to Case-Shiller, and this past month was just 1.2% appreciation, so definitely a cooling. And if you just took the last 3 months, we're actually seeing negative appreciation in the real estate market. So what does this mean for you? As a seller, it's definitely something you want to keep an eye on because the buyer market could be affected by the shutdown. People's eligibility to buy based on benefits they might be receiving, federal employees may drop out of the buyer market. But overall, it's pretty good news for buyers that could bring them to your homes, because if buyers continue to have lower rates and prices continue to flatten out, this will be encouraging news for buyers. If we get those 2 rate cuts before the end of the year, I think that we're going to see an explosion of buyers by the beginning of the year. I hope this stuff was helpful. If you have any questions, call me anytime.